This VAT question is taken from the IB supplementary paper of 2021. Marvelous Marvin Music Mania has supplied you with the following information and has asked you to complete the VAT table to determine the VAT amount payable to or receivable from SARS. VAT is calculated on the invoice basis. This simply means that the VAT liability takes place on the date of the invoice. The other way of doing it is a method that can be applied for. It's not automatic. Invoice basis is the default with SARS. But if you're a small business, it is possible to apply for the cash basis or receipts or payments basis. That all means the same thing. And that simply means that you would owe the money to SARS only when you actually get the cash from the customer. But at the same time, you will only be able to claim VAT back when you actually pay your supplier. This default invoice basis means that you will only claim back and owe the money to SARS on the dates of the invoices received from suppliers or issued to customers. VAT is calculated at 15%. That's the normal standard rate that is applicable at the moment. A useful trick is to simply go immediately and draw your little VAT triangle somewhere on your answer space so that it's easy to refer back to what you're doing. Now, in this particular question, you can see that we are given a couple of wordy questions to answer, and there's the VAT table that will require the calculations. So I'm going to put my little triangle over here. I'm going to put VAT 15% at the top. Of course, it doesn't actually matter what corner you use. 15% of what? It's 15% of the exclusive amount. So exclusive will be 100%, and therefore the inclusive amount will be 115%. Marvelous Marvin Music Mania uses a markup of 25% on cost. In exactly the same way, I would draw another little triangle to track my costs and markups. Obviously, there's going to be a calculation somewhere that I'm going to need to use this. So I'll put my markup 25% at the top. It's on cost. So that means that my cost is going to be the 100%, which means that my sales will be 125%. You can then see that you're given a bunch of information, a whole lot of transactions that happened. And then what's required is you need to answer these questions. Firstly, what is meant by the term VAT vendor? Well, quite simply, a vendor just means a trader, somebody who's buying and selling stuff. And VAT obviously means that VAT is involved. So this would obviously be a business that is registered with VAT, with SARS for VAT. And as a result of registering with SARS, it would have a VAT registration number. Of course, that number would need to be shown on all invoices issued to customers and on all invoices received from suppliers in order to be able to claim properly. Marvelous Marvin Music Mania uses the invoice-based method. Remember we spoke about that? You can see over there we've just made a little note. Name the alternative method that could be used. As was just discussed, this could be known as the cash basis, or you can refer to it as the payments or receipts basis. All of those terms are acceptable. What measure does SARS have in place to ensure that the uploaded information on their system is protected and not tampered with in any way? Well, what do we mean by uploaded information on their system? Quite simply, this is referring to your e-filing. In other words, being able to submit tax returns electronically using the internet. And the way that anybody who's using e-filing would log on is that they would have a username and password. And this would then protect all the information that is uploaded. What is the difference between VAT exempt items and zero rated items in South Africa? Zero rated simply means that that VAT is levied at 0%, whereas VAT exempt means VAT doesn't actually apply at all. Now, interestingly, the VAT exempt items are actually specified as VAT exempt in an Act of Parliament. In other words, by law. Whereas the zero rated are items that can be changed at any time by the Minister of Finance. Interestingly, the zero-rated items are simply levied at 0%, which means the vendors would charge only 0% on those goods, but they can claim VAT on any items for which they paid VAT. So this means that vendors who are, for example, exporting goods or supplying necessary foodstuffs or supplying fuels like petrol, diesel, etc., they often would end up with VAT refunds because they would charge nothing, but they would be able to claim back VAT. And then we need to complete the table showing what is due from SARS. Due from SARS would obviously be as a result of your inputs or the things coming into the business, and due to SARS would be a result of the outputs or the goods going out of the business on which VAT is charged. So now we can go and have a look at all the transactions and see exactly how we're going to calculate the amounts due. So the first one over here says the balance of the VAT control account on the 1st of June was 1,300. This VAT was owed to Marvelous Music Mania. If it was owed to, it means it's due from SARS, and so that would have been a balance at the beginning of the 1,300 due from SARS. Number 2, the total credit purchases of trading stock was 78,200 inclusive of VAT. If it was inclusive of VAT, that means we can now do a little calculation using our triangle, and you can see that it had VAT of 15%. We're given the 78,200 as inclusive, and we are wanting to look for the VAT. Obviously, everything in this table is the 15% that we are looking for. So all that we'll do to get that amount, now obviously if it's purchases, we'd claim it from SARS, so we'd put it on the side of due from SARS, and we could show the 78,200 times by 15 that we're looking for, divided by the 115, because it's the inclusive amount. And that would then give you 10,200 that you could claim back. The owner, Marvin, donated trading stock to a local orphanage. The selling price, VAT inclusive, again, was 13,800. But now notice it says selling price. So there's actually two things that we're going to need to do here. We're going to need to calculate using my markup triangle as well as my VAT triangle. It doesn't actually matter what order you do them in, as long as you remember to do both. So the first thing is, if we are given the selling price, that means we've got the 125, and we are looking for the cost, because obviously donations would need to be at cost. At the same time, this is inclusive. So just like we did the previous one, we're going to have to go and work out the VAT using that. Now, if there were donations, that is going to be goods going out of the business. So we need to show it as part of your output VAT. So over here, we'll show the 13,800 times we're looking for the cost, 100, over we were given the sales, 125, times we're looking for the VAT amount and we were given the inclusive. And so that's why we would say times 15 over 115. And that will give us 1440 that we would owe to SARS. Number 4, trading stock was bought for 81,000 cash, excluding VAT. So now we can use our triangle again, but this time we're given an amount that is exclusive. And obviously we're trying to find the VAT. If we're buying stuff, this is inputs into the business. So it would be due from SARS. So we'll use our 81,000 and we'll say times 15, because we're looking for the VAT, over, because it was exclusive, we're going to use over 100. And that will then give us 12,125. 10% of the total credit purchases were returned during the month. As soon as we've got something where there's a return and something's coming back to the business, this is now simply reversing the original transaction. Now, if we bought the stuff from the supplier initially, because this was purchases that we had made, and we're sending it back to them, we do the exact opposite of what we did originally. Therefore, this would be something that we would need to pay back to SARS because we've already claimed it. So we'll need to go and have a look at the original purchases, and you can see them over here. So we'll need to use that 78,200, and you can actually see it was sitting over there. So this is where we're going to get the information from. And we're simply going to take back 10%. Now, you could go all the way back to the 78,200 and go and work it out again, but you don't need to, because we've already worked out that the VAT is 10,200. So in reality, all we need to do is say 10,200 times the 10% that was returned, and that would give you 1020. Discount was reversed on a fraudulent proof of payment. So this simply means that in this case, somebody had said that they had paid, but for some reason they actually hadn't. And so therefore we would need to reverse the discount, because we'd originally given them a discount thinking that they'd been good, wonderful customers, but they weren't. So obviously then they are not entitled to getting that discount. So what we'd need to do is, again, originally when we gave the discount, it would have been a reversal of the original sale. But now if we're reversing the discount, it's actually going to increase the amount that we owe back to SARS, because we're taking away the subtraction of the discount. So it's kind of working backwards in a double negative. Just think about it very slowly and carefully. The original transaction would have been the sales, then you would have subtracted on the discount. So sales would have been an output. Sales would have been an output. The discount allowed would have been an input, and therefore if we're cancelling the discount, then it's going to be an output again. And it's quite fun to actually just bounce from two sides, but between the two sides, and then you can actually see what you're doing. So that means it's going to be on the outputs due to SARS column. The total amount owing was 713 Rand, inclusive of VAT. The payment was supposedly for 690. So that means that the discount would have been 713 minus 690, which would give you 23. From that, you're then going to need to go and work out the VAT by saying times the 15 over 115. Quite simply, the amount of the total debt would always be the inclusive amount. Debtors, bank, or creditors are inclusive, and that would then give you the 3 Rand that would have to be added to the amount owed to SARS. Bad debts written off. are going to be 13,445. Now, again, if we're talking about bad debts that are written off, the original sale would have happened in the outputs, and the bad debts would need to be claimed back. And so therefore, you're going to work on the input side. The total amount of the debt was the 13,455. Now, remember that that would come out of debtors, and debtors is inclusive. So you would simply work this out as times 15 over the 115. And that would give you 1755 as the bad debt. And then the last transaction that we need to use is going to be the goods were sold. And there's VAT inclusive for cash 92,000 and on credit 103,500. So we've got two entries over here that we need to take into account. We can simply add them together and show, and it doesn't matter if you show them separately, that would also be fine, but it's easier to just add them together initially. So we say 92,000 plus the 103,500, which would then give you 195,500, and you take that times, again, if it's inclusive, we're going to say times 15 to get the VAT, divided by the inclusive 115 that we were given, and that will give us a total of 25,500. All you need to do then is add and subtract. Obviously, if you're working out how much is payable to or receivable from SARS, the easiest is to just assume that your outputs are going to be the positives and your inputs are going to be the negatives, because remember, SARS is a liability account, and you can almost think of this as a little T account that we've created over here. And if you add them all together and you add the outputs and subtract all the inputs, you should find that there's an amount of 2,588 rands that are payable to SARS. And it is very important to either write payable over there or circle payable or cross out receivable. It doesn't really matter which you do, as long as you definitely indicate that that is the final amount that is due to SARS.